Alrighty guys, what is going up? Welcome back to the Best Investing Money Management channel on YouTube. In today's video, we are going to be talking about Zoom. Should you buy, sell, hold? What's going on with this stock? I hope you guys enjoy it. Overall, I hope you guys get something of value out of this video. So what is Zoom? Well, Zoom, I'm sure we all know because of all the lockdowns, Zoom was pretty much the front runner of the video communication sector. It really exploded. It took pretty much the world by storm. And you can see a ton of people made a lot of money off this thing. This thing went from really $60 all the way up to $588 a share, which at the time that was very expected because everybody was using it. The company was making a lot of money, and that gave a return of about 759%, outperforming a ton of stocks. And a lot of people thought, hey, this company is just going to continue. People aren't going to go back to school or work, and this company is just going to continue to grow and expand and make a lot of money. And then once things started to open up, you can see the stock didn't do as well, right? People really realized and missed going out and going to work and all of that good stuff. And the thing about it is Zoom is definitely still a huge factor in these companies and these schools, but it's just not getting used as much, unfortunately. And when something isn't getting it used as much, what happens to the revenue? In most cases, we'll have a slowdown or a little bit of a hardship in that company because they get so used to making that money that they spend just as much to grow and expand the business. And often what happens is they take on debt. To be honest, when a company's growing this big, they'll take on debt because they think it's going to continue. But you can see what happened when things started to open up. This stock started selling off. And in the past year, it sold off quite a bit. From the highs, this thing has sold off about 50% of value. And then year to date, this thing has sold off right at around 20% of value. Now, comparing this to the general market, which gave a positive return of about 17%, this here is underperforming the market by a lot, by double or triple, which is not very good. So the biggest question is, should you buy this stock? For me, I think it's already had its potential. It's already had its move. It's almost like the train already left the station. If you hop on it, you're kind of just in this point where it's selling off, not getting used as much. But the thing about it is, if we actually look at the revenue too, they still bring in a lot of money. They still bring in billions of dollars. But if we compare it to, the 12 months ending July 2021, they were bringing in $3 billion. Now they only bring in about $1 billion, which is not the greatest. Not to mention, if we actually look at some of the assets and liabilities, so this is going to be like the total cash on hand. They have $5 billion in cash, which is actually very, very good because this company realized, okay, we have to start storing cash. You can see how quick they started saving cash because they knew eventually we're going to slow down. And that's what they did. They started saving cash, and the long-term debt is not available for public, but I think that they probably have, if I was going to guess, maybe $1 billion or $2 billion in debt, because virtually every single company, no matter how large you are, you take on debt to grow the business. It's very, very common, expected. So the biggest question, should you buy Zoom? Me, I think it's already left the station. I am staying away from it. I think that there's better opportunity elsewhere. If you'd have just invested in SPY, you would still have this positive, solid return of well over 22% value. If you'd have said, hey, I want to still be in the growth sector, and you would have bought Tesla, TSLA, this would have a return not as great as the S&P 500, but you could have been dollar cost averaging and now be up quite a bit on your money. So it's all about when you're invested into one company, you could be missing out on opportunity elsewhere, something known as opportunity cost. So when you invest in Tesla, you could be missing out on opportunity in the S&P 500 or with Apple or companies like that. So Zoom, I'm staying away from it. The train already left the station for me. No matter if the thing continues to go up or turns around, for me to even be interested on this thing, I would need a break out of about About 400. I think that'd be fair. That'd mean a real turnaround in the company, and we'll need that move coming back up. I just think right now through revenue with the cash on hand, the company knows it's slowing down. And same thing with all the earnings. They've slowed down compared to when it was all in here. So guys, that is it. I hope you guys enjoyed the episode. And if you did, hit that like button, subscribe to the channel, and we will see you guys later. Remember to stay happy, stay positive, and stay safe. Take care.